Welcome to the Daily Update Podcast, where I'll go over the action in the market for Wednesday, October 22nd, and we'll see how things look for Thursday, October 23rd. Going over Wednesday's market action, the S&P 500 experienced a frustrating session, pulling back after building some positive momentum earlier in the week. The index closed down 0.53%, settling at approximately the 6,700 level. Despite this decline, the S&P 500 managed to recapture its 20-period simple moving average by the close, maintaining a positive outlook across the short, intermediate, and long-term time frames based on moving averages. Price action told an interesting story. The S&P opened lower, dipping below the daily pivot at 67.37 and falling through support levels S1, S2, and even S3 at 66.76. However, buyers stepped in, finding support and pushing the index back above S3 to close at 6,700. Volume remained above average, signaling strong participation, though market sentiment took a hit, dropping to 26 and nearing the extreme negative threshold of 25. Several factors influenced Wednesday's downturn. Geopolitical concerns, particularly around U.S. China trade tensions, weighed heavily on investor sentiment. Earnings reports, which earlier in the week had been positive, now were taken as negative on Wednesday. Megacap and tech stocks did underperform, dragging the broader market lower. Meanwhile, the 10-year Treasury yield continues to decline, reaching 3.95%. On the economic front, data was very limited, and we only received the mortgage applications for the week, which fell by 0.3%. Sector performance highlighted a defensive tilt, with energy, healthcare, and staples as well as real estate outperforming, while growth-oriented sectors including discretionary, communication, tech, and industrials lagged. From a technical perspective, indicators showed mixed signals with no strong conviction. The S&P 500 remains range-bound for now, with price action occurring mostly during regular trading hours, which is positive for making decisions. The stochastics as well as other short-term indicators suggest neither an overbought or oversold condition, reinforcing the market's current lack of clear direction. Looking at market trends and observations, despite Wednesday's pullback, the broader market outlook remains positive. The S&P 500 continues to hold above key moving averages with no significant technical breakdown, at least yet. However, there are notable trends worth watching. Margin debt remains elevated, reflecting investor confidence but also potential risk if sentiment shifts. Earnings season overall has been a bright spot, with 85% of the U.S. companies beating expectations. But on the valuation front, the S&P continues to be overvalued with a P/E ratio of 23. Looking ahead to Thursday, October 23rd, seasonality offers a mixed picture. Historically, October 23rd is neutral to positive for the Dow and positive for the S&P and NASDAQ. However, the week following options expiration has been down 55% of the time, going back to 1980. Economic data releases may be delayed due to the government shutdown, including initial and continuing jobless claims as well as existing home sales. Friday's CPI is also uncertain. Geopolitical risks include U.S. China trade tensions that remain a key driver and could cap upside momentum or cause upside momentum to come back. On the sector front, defensive areas continue to show relative strength in the short term, while growth areas are struggling. A breakout above resistance levels, specifically on the Dow's R1 or a failure to hold key moving averages, could help set the tone for Thursday's session. What are the key takeaways and conclusion? To wrap up, the S&P 500 is navigating a choppy, range-bound phase with no clear directional conviction. Conviction appeared to be moving into the market, but that was taken out on Wednesday. And the bigger picture still remains positive. Defensive sectors are outperforming growth in the short term, driven by geopolitical risks and shifting earnings reactions. While the S&P holds above critical technical levels, a weakening trend and mixed momentum suggest caution. Investors should also keep an eye on the unconfirmed Hindenburg omen, with a signal looming to be confirmed by November 7th. Thank you very much, and I will talk to you in the next podcast.